In this video, you are going to learn a simple strategy that will help you to start making money in Forex trading. Don't fail to subscribe, as we are going to release more videos after this. We are going to use an exponential moving average strategy of 8 and 21. The two moving averages are not particularly special. There is no magic. You could use 10 and 21 EMAs, or 10 and 25 EMAs, or 6 and 15 EMAs, or 12 and 35 EMAs, or whatever. However, I do not suggest 50 and 200 exponential moving average. Smaller moving average numbers indicate that the moving average are never far from price, and there is a reason for this. It provides a visual reference for price behavior, allowing you to judge how far price is from the moving average, and whether it is more likely to undergo a correction, that is reversion to the mean, or to break out from the mean. The rule for applying the strategy is simple. You are to wait for 8 exponential moving average to cross over 21 exponential moving average, up or down. Then you wait for pullback of the price toward the moving average. Place a sell or buy stop order as case may be. Then wait for the price to collapse. The strategy is summarized in this chart. You have to wait for a new trend to form, as defined by an exponential moving average crossover. Then wait for a pullback to, or near, the exponential moving average. You can see a pullback here, and here. You are to use stop orders, so that if a pullback turns into a reversal, the trade is less likely to be taken out as price continues in the wrong direction. You can see 2-bar pullback setup, as well as 2 inside bar setups. They all represent a pullback, or a pause, or a period of local consolidation. After that, the price collapse. Here is another example. You can see the crossover here. Then 2-bar pullback or correction. Place sell stop order here. Stop loss order here. And wait for the price to collapse. For you to be successful using the strategy, you have to be patient to wait for pullback. Most traders are not patient, that is why most of them lose money. Look at this chart. You can see the crossover. This is the long candle that did the crossing. You can see the distance of the price from the moving average. That indicates that pullback is any time soon, so you wait. The longer the distance, the sooner the pullback. Safety checklist. In this strategy, there are no strict rules. You have to understand what is happening in the chart and use it to your advantage. But there are some basics, which I call safety checks. These are things every trader should use for every trade. Basic common sense. I think that if you apply these safety checks properly, you could probably trade any system successfully. 1. Dominant trend. Check the trend direction on the next time frame up. I use 4-hour, so I check what is happening on the higher time frame. That is the day chart. It doesn't have to be officially up or down yet, just as long as it is clearly heading in the same direction. It also helps to have a look at what is happening on the lower time frame. In this case it is the 1-hour chart. 2. Support and resistance obstructions. Avoid trading into support or resistance. This could be horizontal levels or inclined levels, as in trend lines or channels. Also, 3. Enter when the price is close to the exponential moving average. Avoid entering when there is a gap between the price and the exponential moving average. Because the rubber band has been stretched here, the price is likely to bounce back before continuing with the trend. 4. Avoid long, explosive bars and instead enter where the bars are short, and such bars are usually close to the exponential moving average. 5. Avoid trading at price extremes. Check the monthly or weekly chart to see if the price has reached a long-term low or high. Don't fail to subscribe, as we are going to release more videos after this.